If you are new to Forex and fixed-time trading, then chances are you have wondered how much you need to start trading. Should you start with the minimum amount brokers allow as a minimum deposit? Or is starting to trade with more money better? Though your broker allows you to deposit as low as $10, it is never enough to start trading. How about $100? Is it enough to start trading? It may sound so much for some while still so little for others. So, let's ask that question again. Is $100 enough to start trading? Well, allow me to deviate from the question a little bit and ask you a more relevant one. What factors determine how much you need to start trading? If we answer that, then you should have a better understanding of how much you need to trade. Without wasting so much time, let's get right to it. Here are factors that inform how much you need to start trading. 1. Minimum deposit amount by your broker. The question of if $100 is enough to start trading can obviously be determined by your broker. How much does your broker allow you to deposit? If your broker allows a minimum deposit of $100, then you can decide to start with that and grow over time. But of course, not all brokers allow the same deposit. Different brokers have different minimum deposit amount restrictions. There are those whose minimum deposit amount is $200, others $500, and others even less. If your broker allows you to deposit as low as $100, and that's the only amount you can afford, then go ahead and use the offer. 2. How much disposable income you have. Disposable income means that after spending a certain amount on something, you can still continue living your normal life. Normal life means that you can still pay your bills and put food on the table. So about this factor, is $100 an amount you can afford to spend and even lose in trading and still not be affected? If so, then it may be enough as an initial investment in Forex. However, if that is not the case, and spending $100 on trading or even losing it will affect you adversely, then no. $100 is too huge an amount to start trading with. Any amount you invest in trading should be an amount you can afford to lose. That is why I advise that you should not be in debt or struggling financially before you resort to trading. You will get the shock of your life when everything takes a turn for the worse because trading is risky and can lose you money in seconds. If your disposable income is more though, you can do better by starting trading with even $1,000. The higher the starting capital, the less the pressure. 3. Emotions while trading. Emotions are too human, and as long as you are not a machine, they will affect you. The only way out is to tame them, but given that we are talking about a beginner here, emotions must play part in the equation. So let's say you start trading with that $100. You spot a suitable signal and are convinced that it is a good trade setup. You set up your deal so perfectly with your stop loss and take profit in place. Minutes later when your take profit is hit and you realize that you made 10% of your account. You are so excited until you realize that it is equivalent to only $10. If you ask me, 10% in a few minutes is way too huge, but as for you, quick money is what you want as a beginner, right? Greed takes the better part of you and you start engaging in risky behavior of risking more than 5% of your account in one trade. Sooner, you realize that you are exposing up to 50% of your account and in not more than 5 deals, you have already blown up your account. $100 is only enough to start trading if you know what to do with your emotions while trading. Otherwise, you can only survive with a bigger amount. 4. Trading strategy you intend to use. Trading strategies vary from trader to trader. One trader uses a certain trading strategy whose money management requires a certain amount of starting capital. The other uses another whose money management is only possible if a smaller or larger starting capital is available. We know that in Forex, you are not supposed to risk more than 5% of your trading account, but the case may be different in fixed-time trading. There are fixed-time traders who have formulated robust trading strategies. In such strategies, when a signal comes up, only a specific maximum number of candlesticks can defy, after which that last trade often wins. In that case, you only need to know how many candlesticks can defy and so how many maximum trades you can lose before a win. Are you using the martingale money management system, which involves doubling trade size after a loss? Then you can calculate how much you need in your trading account to cover for the maximum trades lost before a win. $100 is only enough if that system of yours requires only a maximum of $100 before you win. If the system requires more, then what else can I say? It's not enough. 5. How much return do you anticipate? Let's say you want to be risking only 2% of your account in every trade. 2% of a $100 account is $2, while 2% of a $1,000 account is $20. Let us also assume that you are trading fixed time and the asset you are trading gives you an 80% return every time you win. So if you trade with the $2, you earn $1.60, while if you trade with $20, you earn $16. You know where I am headed, right? The returns you want per trade, when coupled with your risk appetite per trade, should inform how much you need to start trading. It also applies to Forex. Here, your risk-to-reward ratio dictates that the more you risk, the more you should target. If $100 achieves the desired returns, then it's enough for you to start trading with. If it doesn't, deposit more. Again, is $100 enough to start trading? Go on and comment with how much you can afford at the moment. And if you don't have a trading account, consider opening one with the link on the description of this video. This broker allows a minimum deposit of $10 and a minimum withdrawal of $10. If you liked this video, give us a thumbs up. Also, if you haven't subscribed, click on that subscribe button and turn on the notification bell. Click the video on the screen to continue learning about trading. See you on the next video.